Today, we're talking to the people who have never heard of this before, people who maybe have heard of it but don't really know what it is exactly, haven't looked into it. And the topic of the day is life insurance. Wow, Kai, why are you bringing up life insurance? Well, if you're someone who wants to save money, if you want to build wealth, if you want to give a gift for posterity, life insurance is a good way to do that. And we're going to talk a little bit about when you should buy it, what you should buy, and what are some tips and tricks when you're looking out for life insurance. I've went through hours of research, finally decided to buy life insurance. It's a good idea, and you'll find out why. Now, let me preface this by saying I'm not a financial advisor. This is purely from the point of view of also a consumer, just like you. So the reason why people usually get in life insurance is to protect their families. And what does that mean? Usually, life insurance is to protect you from situations that are unforeseen and out of your control. So there are different types of life insurance if you're considering it. The two main types that I've seen are term insurance and whole life insurance. Term insurance usually means you're only covered for a limited period of time where you're going to get coverage for certain types of illnesses. If you get some kind of disability or long-term critical illness, then you're able to get coverage if something happens to you that will pay for all your medical expenses, and that can grant you a lot of peace of mind. If you own a home, for example, there's something that's called mortgage insurance, and that's actually similar, but it only protects your home and paying off your mortgage if you get sick or whatnot. Versus life insurance is more comprehensive and better than mortgage insurance. So whenever the bank offers you something, you will always want to shop on your own and look out for agents who sell life insurance. Now, this is one type, the term. There's also the whole life insurance, which is the type of insurance you buy that will give you a death benefit, meaning upon death, whoever you decided gets the money you put into the life insurance gets that money. And that's guaranteed. When you buy a life insurance policy, the payout is guaranteed by contract. And there's an amount written on it, depending on how much you buy. And you pay a certain amount to get a high amount of coverage that you're eventually going to get upon death. Why put money into life insurance when you could be investing, say, like into a very safe index fund? You can do both, and generally that's advised. It's just a way to bucket your money. One framework that I found really useful is you put your monies into different buckets. Like a certain percentage you would save, certain percentage you would invest, certain percentage you use for living expenses, certain percentage you might donate or use for charitable purposes. Life insurance could be in your savings bucket. It could be, for example, if you usually save 10%, maybe you use 5% of that to contribute to your life insurance and invest into your family's future. So what did I learn from buying life insurance? You generally want to go for the whole life when you can. Term life is very situational, and you go seek an expert to figure out if you need it. But whole life is generally the way to go because you get a guaranteed payout in the end. And contractually, whatever amount you put in, you're going to get more of that upon your death for sure. What I found was the 10-year plan. I pay everything off in 10 years and then I'm done with it. That was much more beneficial. You get more coverage. You get to get rid of the chore of buying life insurance and you're done with it. After 10 years, you're done paying and you can set it and forget about it. There's always an opportunity cost when you buy something. The money that you've used to buy, for example, life insurance, you cannot use to invest in the stock market, for example. So that's always to keep in mind. And however you choose to use your money and bucket it, you want to make sure you know what you're putting it for. So what's the goal? What's the purpose of life insurance? Yes, it's a gift for your family, for posterity, but it is also a way to save money. You know, if you're someone who receives money usually and then the money comes into the bank account and then after it disappears for whatever reason, it transforms and transmutes into a new bag or some new jewelry or some new items from Amazon that you didn't think that you needed, but somehow it ended up in your home. And a lot of that, I'm speaking from experience, by the way. When you have a vehicle that allows you to put money aside in a way that you don't have choice but to put money aside, when you get the life insurance bill, for example, you need to pay the premium. It forces you to put money aside for the future. And that is not money for you, but for your family. What kind of returns can you expect from life insurance? It's not going to be an investment of a lifetime or something that will get you rich. Think of it as a way to save your money. And it's money that's not very accessible because once you buy it, usually you only get the benefits after your death. You won't even see, you know, what happens with your money after. How much are we talking about? It might be anywhere between 3 to 5 to 7% returns. But let's stay on the conservative side. Let's say you only get like 3 to 5%. That is as if you put your money into anything else, say like some high interest saving account or whatever. But again, the benefit of that first is it forces you to save. You know, it's savings that you'll never be able to access, or not never, but for the most part, for all intents and purposes. And second of all, there's another benefit to life insurance is you get to borrow more money from the bank. Now, why is that? Because when the bank knows that you have life insurance, they know that you have the ability to pay back. So, what did I learn from buying life insurance? You generally want to go for the whole life when you can. Term life is very situational, and you go seek an expert to figure out if you need it. But whole life is generally the way to go because you get a guaranteed payout in the end, and contractually, whatever amount you put in, you're going to get more of that upon your death for sure. And how is that possible? Well, the insurance companies usually invest your money, so you're going to get more back in the future. And the benefit of life insurance versus other things, when you buy an insurance policy, you start off with a nest egg. What that means is you get a certain amount of coverage or value that increases over time. You build what they call cash value. That could be, tens of thousands, hundreds of thousands, depending how much you're buying. But that essentially is like extra leverage for you. You're using that to increase the initial amount you have that will compound more in the future. What I found was the 10-year plan. I pay everything off in 10 years and then I'm done with it. That was much more beneficial. You get more coverage. You get to, get rid of the chore, I guess, of buying life insurance, and you're done with it. You just after 10 years, you're done paying, and you can set it and forget about it. And of course, the bulk of it is you want to buy it young when you're healthy, so that wouldn't cost you too much. And again, if you have your budgeting already done, you want to make sure this will fit within your budget because this is a long-term commitment. If you get a policy, usually it's 10 years plus. So it should fit within your budget. Anywhere between 5 to 10% should be reasonable. If you've never heard of life insurance, if you've heard of it but haven't really looked into it or bought it, it provides you financial security. If you're young, it is a great time to get life insurance because the younger you are, the cheaper it is. Most people think that life insurance is boring or life insurance is a scam. But life insurance is like a very safe and conservative way to save money, not for yourself, but for people that you care about.